Assalamualaikum warahmatullahi wabarakatuh. We are from Group 1. We'll be presenting on financial statement fraud in Transmil Group Berhad. Here are my group members that are consist of Siti Haja, Intan Sarah, Sofia and me, Azrina Hanu. Okay, let's go to the introduction about Transmil Group. Transmil Group Berhad is an investment holding company that provide air transportation services. Through its subsidiaries, the company deals in aircraft equipment and parts, offers engineering, line maintenance and ground handling services. They also provide aircraft leasing. The company was founded by Gan Boon Aun in November 1993 and was later listed on the Bursa Malaysia Securities Berhad on 27th June 1997.
Next, we will move to the fair of cases of Transmart. In 2007, Transmart was hit with an accounting scandal with allegation that its revenue and profits had been materially overstated as far as back in 2004. The Chief Financial Officer, which is the CFO, Loh Chok Bin, had confessed to the company that he had overstated the revenue of Transmart for the financial year ended 31st December of 2006. The issue started when the company failed to adhere to the deadline in submitting the audited financial year ended 31st December 2006 to Bursa Malaysia for the public release. It was supposed to be submitted no later than 4 months after the financial year ended, which was on or before 30th April of 2007. Things got worse when its internal auditor, Deloitte and Touche, declined to approve the audited accounts due to the lack of certain supporting documents related to trade receivables and related sales and the purchase of the property, plant and equipment. The board of directors of Transmart has neglected their duties in governing and monitoring the company, as they have admitted to leave the business entirely to the management. Furthermore, the audit committee of Transmart has also failed in carrying its responsibilities.
Next, we move on to the preparators. Basically, on 19 June 2007, Morris Roland Risk Management Sdn Berhad revealed that the audit report of the financial statement of Transmart. Next, on 12 June 2007, the Securities Commission charged the 3 former executives of Transmart Berhad for giving misleading financial statement. The former executives are Gan Boon Aun as a founder and CEO, Loh Chok Bin as a chief financial officer, Khairuddin Mohamad as an executive director. Also, Jimmy Chin Kim Fyun and Shukri Sheikh Abdul Tawab as directors. Gan Boon Aun was at the time as a founder and former CEO of Transmart Berhad, and Loh Chok Bin was a former CFO of Transmart. They made unaudited revenue figures reported to Bursa Malaysia for both fourth quarter 2006 as well as a cumulative period for 2006. The Security Commission (SC) alleged that they had overstated Transmart Group Berhad's revenue to give the impression that the final performance of Transmart Group Berhad was in line with the market expectation, when in fact it was not. The SC Security Commission also claimed that they had played a key role in inflating Transmart Group Berhad's revenue by creating fictitious sales transaction between Transmart Air Services, which is TAS, and 20 purported customers in order to make it appear as if the 20 purported customers had made payment to Transmart Air Services for the fictitious sales. Gan Boon Aun had authorized the payment for monies from TAS to some of the 20 purported customers before the monies were transferred into TAS to be recorded as genuine payment for the flight charter services rendered by TAS. Next, we move on to the failures. For the failures in terms of governance, the company was alleged to have overstated its revenue by a total of 522 million in the financial years 2004, 2005 and 2006. Also, all material matters raised by the auditor were expected to be reported to the BOD for information and further deliberation. In addition, 341 million in its property, plant and equipment account appears to have been fabricated, as the amount was little supported by the documents. I said this as a failure because the good corporate governance means that a corporate setup that leads to maximizing the value of the shareholder legally, ethically, and on a sustainable basis, while ensuring equity and transparency to every stakeholder who are the company's customer, employees, investor, vendor partners, and government of the land and the community. Unfortunately, this was not the case in Transmart Group Berhad as some pertinent information was not communicated to the BOD. The audit committee had been alerted on several occasions by the external auditors of serious accounting issues, but despite knowing the auditor's concern, the audit committee did not immediately highlight them to the BOD and went ahead to seek for consideration and approval of the BOD for the release of an unaudited annual accounts.
Next is risk management. The internal auditor, which is under the audit committee, is responsible for assessing the risk management of Transmart. However, the internal auditor did not carry out these responsibilities. Even though their external auditor, Deloitte and Touche, has raised 2 warnings regarding their financial statements, the internal auditor and the audit committee have failed in raising the issue to the board members. Instead, they seek of the board directors' approval to release the unaudited annual account. From the mid of 2004, Transmart has outsourced an independent internal audit firm, which is Morse Rowland Risk Management Sdn Bhd, for internal audit functions. However, the auditing scope is limited on specific areas as instructed by the audit committee of Transmart. The internal audit did not include some critical areas such as the company finance division and sales. Thus, it does not cover the review of Transmart financial statement.
Next, I will continue with the last failures on rules and responsibility of internal auditor under control. As we all know, internal auditors are responsible for ensuring controls that are established by the management of an organization. They also assist management with the evaluation of internal controls used to detect or mitigate fraud, evaluate the organization assessment of fraud risk, and are involved in any fraud investigation. Although it is management's responsibility to design internal controls to prevent, detect, and mitigate fraud, the internal auditors are the appropriate resource for assessing an effectiveness of what management has implemented. In this case, Transmart's audit committee and the top executive had been alerted by Deloitte and Touche on the overstated revenue. Yet, the audit committee decided otherwise and went ahead to seek the consideration and approval of the Board of Directors for release of the unaudited annual account. In fact, the auditor's concern was not immediately highlighted to the entire Board of Directors by the top executive and the audit committee upon being alerted by the auditors. Here, we can see that from the beginning, there is a lack of internal control in the management whereby there was some pertinent information that was not communicated to the Board of Directors. As for recommendation, we're using IPPF as an alternative way to prevent this failure, where it provides a structural blueprint that facilitates consistent development, interpretation and application of concepts that are useful to the internal audit profession. One of the components in IPPF is the Code of Ethics, where it is necessary and appropriate for the profession of internal auditing. Firstly is integrity. Based on the case, the release of the unaudited result that were not qualified had a great shock, and that the management and audit committee had failed in fiduciary duties to alert the board of warning raised. One way the audit committee assists the board of directors in carrying out its statutory duties and responsibilities was by serving as a bridge in the communication network between internal and external auditors and the board of directors. Second is objectivity. The independent auditors had intentionally allowed the making of false representation to Bursa Malaysia by releasing the unaudited consolidated result for the fourth quarter of the financial year ended 31st December 2006, despite the audit alert. This principle should adhere to the auditors to make a balanced assessment of all the relevant circumstances and are not unduly influenced by their own interests or by others' informing judgments. And lastly is competency. According to Transmil's Annual Report 2003, the Internal Audit Department was entrusted with the responsibility of appraising policies, procedures, and management controls of the group so as to ensure the activities are properly managed and to promote effective controls. Therefore, the Audit Committee was expected to be more prudent and stringent in its roles of overseeing the internal control system.
Last but not least, for the conclusion, it can be concluded that Transmart Group Berhad was involved in fraudulent financial reporting, which it is an intentional misstatement or omission of amount disclosure with the intention to deceive users. Transmart overstated their income to show that they have an excellent performance in order to make their company look good in the eyes of the investors. Thus, this case should be a lesson to others company because it shows that no matter how good you are at the defrauding or high your position is in an organization, when you are caught for committing fraud, soon or later the punishment will be severe. So that's all from our group. Thank you.